What's good, y'all? Welcome back to another monthly market breakdown with myself, Dahuda Hunter, aka the Market Mentor. What an August we had. Not just for the markets per se, but just life in general for me personally. I got the opportunity, thank you again to Earn Your Leisure and EYLU community to speak at InvestFest last weekend, and boy, was it a blast. Shout outs to Magda, Stephanie, Vice President of the EYLU community. There were so many gems to take in. A lot of conversations had, meaningful conversations, I should say, definitely had. And it was definitely a moment that I will remember forever. And also just build upon as well as someone who serves the community to help educate them on investing. I'll share some of the experiences I had. One being, got the opportunity to speak with Cedric Nash. He's a millionaire mentor. I got to meet him at his Black Wealth Summit last year in DC, and also that was also a great summit that I went to. Took a lot of information down from that, and to see him here at InvestFest, his presentations and his panels, they were amazing. I think one thing that stuck out to me that just made me reflect on my journey was when he talked about why you don't necessarily need to pay off your debt before you start investing. What you can do actually is pay your minimum debts, invest, and let your investments continue to build to the point where essentially your investments will be able to take care of your debts. That was a very key point because for me, in my personal journey, I actually waited until I paid off all my student loans before I actually started investing. And now I look back on it now and I'm just like, you know what? I missed out on a lot of shares of Apple. I definitely missed out on a lot if I had just been investing while I was still just paying off my debt. But you live and you learn. There's no one way to do something as long as you execute your plan, and that's what I had done. Caleb Silver was also another amazing person that I got to meet. For those of you who don't know who Caleb Silver is, he is the CEO of Investopedia, which was essentially like the AI for investment education before AI came about. I know for sure I still utilize Investopedia when I'm doing my research from time to time, so it was a pleasure getting to meet him. And one of the gems that I got from him, revenue to employee ratio in certain companies. Obviously, you want that ratio to be the highest. If that ratio is high, that just goes to show the productivity of that company. So that was a gem that I took away from Caleb Silver over last weekend. MG, the mortgage guy, great person, genuine guy, a legend in the real estate space. David Twee, he's a real estate developer from Toronto, Canada. I actually got to meet him on VIP night backstage. I think he played a pivotal role in where I'm at today when it comes to investing, because we did have an interaction a few months back within our EYLU community where I had asked a question and the answer he gave me really stuck with me, and I think it truly shaped my character as a person and has helped in my just maturity being new in the real estate space. So it was nice to catch up and just give him his praises and let him know how he's impacted me. That meant a lot. Yeah, and so some people are asking like some lessons from being in that space, having VIP access, backstage access. I think the biggest thing or biggest advice I would give is just knowing who you're talking to. For example, as a tip for anybody interested in going to InvestFest next year already, like once they drop the lineup, get to know who's on that lineup, know what they do, so that when the time comes to have an interaction with them, you're privy to what they do. You can talk on it, you can ask about it, or you can share how you can help them with their business. I think that's one of the biggest lessons I took away from just being in that space. I think there can be a misconception when you're around certain caliber people. I know some people may say like, oh, you know, these rich people or millionaires, billionaires, they're all stuck up, blah, blah, blah. But that wasn't my experience. At all. To tell you the truth, they're actually some of the most genuine people I've ever met, and they actually want to help more than you think. So a lot of advice was given, open conversations, was very much so welcoming environment and just very peaceful and just genuine all around. And then we also had another interaction, and it wasn't like a speaker or anybody that was necessarily directly involved with InvestFest, but it was with a security guard. Austin also serves as our crypto guy for EYLU, but we were sitting waiting on Miss Business events to start, and it was just so timely that I heard him say this, and it stuck with me throughout the whole weekend, and I kind of used that as a reminder while I was in those spaces, and he said, people say you missed the opportunity. You don't really miss an opportunity. It just goes to somebody else. And when he said that, I was like, oh my God, that is so true. You don't miss opportunities. It just goes to somebody else who was ready for it. And so I kept that phrase in the back of my mind the whole entire time as the weekend went on, just to remind myself, like, hey, like, there are going to be opportunities that present themselves. Just make sure you're in a position where you don't let it just slip and go to somebody else. So that was a major takeaway. And I'm glad I heard that at the beginning of the weekend because it definitely helped as I navigated certain rooms and spaces that I was in. But yeah, that was my experience. Now it's back to work. It's back to getting locked in and improving. So we're going to get into it. We're going to talk about September, go into the monthly market breakdown. Again, as always, using that Stock Traders Almanac to get some historical context and see how we should be maneuvering, or how I will be maneuvering this month. So full disclaimer, this content is presented to be used and must be used for informational purposes only. It's important that you do your own research before making any investment decisions based on your own personal circumstances. You should take independent and financial advice from a professional or independently research and verify what you hear on this channel. So let's talk about August, the recap. What happened in August? These are the insights that we got from the Traders Almanac for August. Historically shows peak weakness. It's the worst month for the Dow, second worst for the S&P 500. Post-election years, Q3 pattern showed a modest positive performance despite historical weakness. We are in a post-election year. Discussed the theory of that down Friday, down Monday pattern. That actually didn't actually show this month, if I'm not mistaken. Jobs data disappointed and fundamentally shifted the Fed's policy expectations for September rate cuts. Odds are in favor of a rate cut coming this September, and we'll touch on that more as we get through the presentation. So what does history say about September? September is the worst month for the market. Since 1950, September has been statistically the worst performing month across all major indices. That's the S&P 500, that's the Dow, that's the NASDAQ. It's so bad that it's known as the month when leaves and stocks tend to fall. That's literally how it has it quoted in the Traders Almanac, which is hilarious to me. We see the historical performance. We said it's the worst monthly rank since 1950. S&P average return, negative 0.6%. And specifically, the Dow has been down after Labor Day 12 of the last 16 occurrences. And as we know, this is Labor Day weekend, so that is something that we will keep an eye on to see if that occurrence continues, that trend. But typically what happens in September is cleaning house. Portfolio managers, and after Labor Day, you also have the end of quarter mutual fund restructuring, which creates selling pressure. And then you also have people tax loss harvesting. So they'll cut their losses short ahead of the year-end statement for tax purposes. So also what happens in September, which is very important to look out for, is quad witching. You have option contracts expiring on the same date. You have futures contracts expiring on the same date. So that creates a lot of volatility. And the week following quad witching has shown particularly poor performance patterns. Also, the Almanac discussed a Super 8 days theory. So the traditional Super 8 days pattern has deteriorated significantly in 2024, which suggests that current market dynamics are shifting away from historical calendar patterns. So that's the whole idea of when the last three trading days of the previous month and the first 5 of the current month tend to be positive. That pattern or theory has seemed to be dwindling in recent times. So here we are looking at bar chart, and we see how on QQQ we closed out August at 0.95%. The S&P 500 closed out at 2.05%. And then we also have the Dow, which closed out at 3.41%. So as we mentioned in last month's episode where we talked about how August can have its weak point, has its dips, but Q3 in general has modest positive returns. That's why it's important to pay attention and wait for those dips. We had an early dip in August, and I went over that in my Patreon, and I shared all the plays that I got into at that time and why. And since then, they have all ended the month positive. So it goes to show why using historical context can be important when it comes to current investment decisions. We always say history may not repeat itself, but it often rhymes. And that was the scenario for August. So in the current landscape of things right now, we're looking at the Fed policy shift. So we talked about the July jobs disappointment and how, based off the Fed watch tool, rate cut probability is at 85%. We also talked about the significant downward revisions from those payrolls, which should suggest broader economic slowdown concerns. And we also had the Fear and Greed Index at 59, which suggests markets are not positioned for major moves in either direction. We actually are currently in greed right now. We have moved from neutral to greed at this current point. Critical inflection point, September 25, represents a unique setup where historically bearish seasonal patterns meet potentially bullish monetary policy shifts, which creates both significant opportunity and elevated risk. We'll get into that. So as I mentioned here, you see the Fear and Greed Index as updated as August 29th. We are currently in a state of greed at this moment. Watch list for me for September, I'm waiting on the Fed to announce what they're going to do with the rates. That's going to be a catalyst whether things go positive or negative. It's riding heavy on that. Also, what is going to be important is the August jobs report that should be getting released this Friday on September 5th. The inflation rate has cooled down, but we are still currently at 2.6, and the goal was to bring it down to 2%. So when they reported the PCE reports last week, that still left doors open for rate cuts as well. So if the August jobs report continue to perform poorly, wow, my goodness, perform poorly like they did in the previous jobs report, that is going to put more pressure on the Feds to apply those rate cuts. Those are two main things that I'm watching for right now with September. Next, as we mentioned before, quad witching. Like I said, the options, futures, and index options expire simultaneously, and historically volatility spikes expected around this date and into the following week. We do have portfolio rebalancing that typically creates selling pressure. And then we also have the government funding deadline, September 30th. That's their fiscal year end. They're in recent years, we have seen a lot of issues around them agreeing on a budget. That could also add some volatility into the markets as well. As we talk about those rate cuts and how the odds are in the favor of rate cuts this month, it makes sense to talk about who may be beneficiaries of that rate cut environment, right? In the June monthly market breakdown that we did here, we talked about how this actually happened last year when they announced that they will be doing rate cuts. They didn't even put it into action yet. They just had announced it. And what we saw was REITs, home building companies, they benefited from that hint at the rate cuts. We also saw small cap growth, the Russell 2000, those stocks, we saw those stocks rise up in price. Tech is also going to benefit from the low interest rates, but just be mindful because some tech companies are already selling at almost all-time highs, or they may be overextended. So although rate cuts typically do benefit the market, if a company is already at its high point, it's not going to do you any good at that time. You definitely want to make sure that you wait for that company to pull back, because a pullback will be coming if they are already overextended. And then lastly, crypto, risk on assets. They typically benefit from rate cuts. Talked about this before. Regulatory clarity is improving with the XRP's case being dismissed. And one thing that I'm going to be paying attention to closely as well is seeing that Bitcoin dominance level. When it comes to crypto, as that Bitcoin dominance level decreases, the Ethereum and the altcoins start to pick up. And that's when we see that altcoin season kicks into play when we're talking about the crypto space. So that's what I'll be looking for September. It's going to be a very shaky month, I feel like, between the rate cuts, seeing what happens with this next jobs report. There's a lot on the table right now, and currently, like we just saw, we're currently in a state of greed, and we know that September is the worst month of the market. So, as Warren Buffett says, you should be fearful when others are greedy, greedy when others are fearful. So that's something just to keep in mind heading into September. So some takeaways for myself, and I think you all could benefit from, is that, early September, we talked about it. Weakness after Labor Day. It may provide potential entry opportunities for quality names. This is not just for traders, but this is also for long-term investors as well. Mid-month, September 17th is that date for the Fed decision. That can be a catalyst for direction of where the market's going to go. Late September, quad witching, always volatility during that time, and also rebalancing. It's important to pay attention to your risk management, especially this month. I mean, you should always be paying attention to your risk management, but I think it's especially crucial when we are entering what is the worst month of the market. You may not want to, if you're a trader, you may not want to go in with such a heavy size. You want to just make sure that you're paying attention to key levels, key monthly levels, key weekly levels on whichever company that it is that you are trading. I also just wanted to share here in the corner here the plays that I had gone over in the Patreon, the roundtable with the community. All the posts from August are now available to the public for free in honor of just having an amazing InvestFest weekend. I'm just like, you know what? I'm just going to give this out so people can see how I walk through each options play that I went into, why I did it, and we see what happens so far at the end of the month, where all 4 trades are above 20% at the moment. I do have 2 leaps in there, which is that APLD play and the Uber play. Palo Alto and CoreWeave, those are short-term plays that I'm in right now. I'm thinking I may collect my profits before things get chaotic with September. But if you want to see more of that, you can follow me along in the roundtable. I'll definitely be going in and digesting those plays in more detail. There is one more play that I did sneak in before August ended, and that was Dell, because Dell had actually came down to a key area and hit a few of my alerts. And I was like, you know what? I think this may be presenting a good opportunity. So let me go in. And again, it goes back to risk management. Like, I also understand we're entering the worst month of the market. So I went in with a smaller size on this options trade, but I'm looking for support. I saw a support level that it has touched, and I did see buyers showing up on a shorter time frame, and then I pulled the trigger. So that is what I'm looking at for September at this moment. To get more details on that new Dell play that I did enter, I'll be dropping more information again, like I said, in the Patreon for those who are interested, and I'll definitely leave a link for you guys to join. And that's what I have for this month. I think September is going to be a very shaky month, but it can also be a very blessed month if we are patient and we wait for our alerts to go off and enter at an area of support. I think what tends to happen is to long-term investors and even traders, they just become too impatient and they want to get in a play just to be in a play, when really what you should be doing is looking for that greater risk to reward ratio. We know that the market is rigged to stay up. We know there are certain companies that are needed to push the envelope in this society. So the best thing that we can do is follow smart money and wait for certain levels to hit. And so that's what we got for this month's monthly breakdown. Again, just give special shout outs again to EYLU and EYL. Thank you, Troy, Rashad, Ian Dunlap, Mike, all the guys and gals working behind the scenes to keep that community running. Truly grateful for you guys and everything that you guys have been doing for our community. And so till next time, y'all.